All right, so that's some of the big headlines that we have been tracking at this point in time. But yes, of course, the broader markets are giving it away with the pressure that we have already seen on the benchmark indices, because Nifty 50 is now seen to be retesting the levels of 22,500 level, while Nifty Bank, that is also down more than 1,600 points. But bigger cuts happening on the mid and the small end of the market, and especially with respect to the mid cap index, it's down almost 3.5%, while small cap index is down more than 4% as we speak right now. And there has been no respite from the day's lowest point because we have already seen more than an hour of trading session. But with this, let's move on to the Midcap Masala show. Let's welcome our first guest onto the show, and let me welcome the management of AWFIS and Mr. Amit Ramani, who is the CMD of Office Space, joining us on the show right now. Hi, Amit. So good to be speaking with you. And well, of course, amid the current geopolitical tensions, firstly, wanted to understand what sort of a demand that you are seeing from your GCC clients, because of late, that's one of the pockets that has seen a lot of interest. GCC hubs to be there in India. The MNCs were actively looking out for spaces. So are you witnessing any impact because of the ongoing situation?
See, I mean, luckily on ground, there's been almost no impact. I think demand continues to stay strong. Every quarter, there are about 25 new first-time GCCs that are coming into the country. Last year, there were approximately about 60 odd that came. This year, the projection is to be 100 plus. The market for GCCs by 2030 would almost double from where it was in 2025. And we continue to see a very expanded, requirement. And as a result, obviously, the commercial real estate and flex space, which will occupy almost 50% of that demand, will be occupied in flex. So I think both GCC as well as the flex sector continues to see very, very strong demand.
Okay, so at least that sounds optimistic, Mr. Ramani. Hi, morning. This is Snehi also joining in. Talk to us about the milestone that you have just achieved. You've crossed 100 plus centers in South India. Talk to us about where this momentum is heading. Do you think there is more growth room in this market, or do you believe this market is very close to now its saturation point?
I think there is a humongous amount of growth room. I mean, it's in 2020 that we had 50 locations. Today, we have almost about 270 locations, and 100 of them today are just in South India. In terms of the scale of the business, I think each of the cities, Bangalore today has approximately 40 locations that are there. I believe that these could double in terms of scale in the next 3 to 4 years. Because each of the micro markets today has a huge amount of potential, both for co-working as well as managed office. So I see the growth to continue. India is an extremely under-commercialized market. And by 2040, if most of India, 50% of India is going to stay in 7 metro cities, services sector is going to see a lot of growth. And because we are under-commercialized, I think the sector obviously has a huge upside to it.
All right, but Amit, if you can share some numbers with respect to your total occupancy in South India versus your overall portfolio, just for the comparison.
So overall, the portfolio, I think we are sitting at mature centers, which is 12 months or more, at about 84% occupancy. For the centers which are obviously at a blended level overall for the company, we are sitting at about 75%. I think the trend between South and the rest of India, I think it's similar. It's not anything that is distinctive between South and any of the other parts of India.
Okay, so that is on your occupancy, but also talk to us about what is happening in the rest of the country. Which cities are emerging as the strongest growth drivers for you? Where do you see the next leg of expansion coming from?
So I think clearly the tier 1 cities, which is about 85% of our portfolio today, will continue to see the growth, because the demand for tier 1 cities will continue, even with all the infrastructure challenges that we see in tier 1 cities. Bangalore, Hyderabad, specifically for GCCs, and then for BFSI, the Maharashtra belt of Mumbai and Pune, we are seeing significant amount of growth. Delhi NCR is fairly strong, and Chennai now is the third city that is appearing as a GCC potential for clients. The tier 2 cities obviously have a lower base and hence are seeing a larger percentage growth. But the challenge remains that compliant supply is kind of inhibiting some of that growth. I mean, cities like Jaipur, if you want 5,000 seats today in Jaipur, there is very limited availability. And hence, there are a lot of opportunities today to create infrastructure from base in some of these tier 2 cities to accommodate some of this GCC demand, that part of it which is going to these tier 2 cities as well.
All right, but Amit, what about your future planning? Just wanted to understand a bit more on that. Are you planning to expand into newer formats, maybe like managed offices, hybrid workplace solutions, anything of this sort that is looking to you as next growth opportunity?
So I think clearly co-working and managed office, which is about 75% of our business today, continues to see a very strong growth. I mean, 32% this quarter was co-working and managed office. Both of these will continue to grow as obviously the market grows. We started design and build fit out services about 3.5 years ago. That vertical is seeing a lot of growth in the market as well. We are almost going to be at about 300 crores in that business, which is growing at a very, very fast clip. The future pipeline looks extremely strong, almost about 8 lakh square feet or almost 200 plus crores of pipeline is aligned there in that vertical. We also launched furniture under the brand Frame, which continues to be strong, and our F&B offering under Office Cafe, and also our Office Tech Labs for our IT solutions. So all of these areas, I think, are young businesses, but I think will drive some of the future growth for the company.
Okay. Mr. Ramani, I'm going to club two questions since we're slightly short on time. Just want to understand, as we're drawing out towards the end of the year, the operational seat guidance of 32,000 by the end of this year, are we on track for that? Any visibility on FY27, and also that 30% growth in revenue and 30% growth in EBITDA for the full year? Are you on track to achieve that?
Yeah, I think we are broadly on track. I think 1,66,000 seats is what we are targeting to exit operational seats at March of 26. And, obviously, I wouldn't like to give guidance for the future, but at least in terms of growth guidance for the co-working and the managed office business, we will achieve the 30% growth and the EBITDA growth also that we projected. For FY27, we are in the final stages and we would announce that as part of our earnings call in May.
All right, and we look forward to that. And with this, Amit, let you go. So good having you on the channel today. Thank you so much for your time. All right, but with this, viewers, it's time to slip into a very short break. But before we do that, let us tell you that 20 years of telling India's story. It's Times Now that has always put India's agenda first. And as we mark 2 decades of deliberation and action, we turn our case to the future, to a Viksit Bharat. Leading the charge on charting the roadmap is Times Now Summit, a definitive leadership platform that brings together the country's most influential leaders, thinkers, and change makers, all driven by one goal: shaping India at 100. Join us on 26th and 27th of March in New Delhi as Times Now leads the national conversation where ideas meet intent and India's future takes shape.